Hello, everyone, and thank you for joining us for today's webinar, First-Time Financial Statement Audits, Understanding the ROI for Tech Companies. I wanted to start the presentation today with a few housekeeping items. You'll see you can maximize or minimize the webinar pane during the presentation by using the red arrow buttons. During the webinar, we also encourage you to ask questions. You'll see a chat box that you can use to enter those questions. Just type your question in and click submit. We'll be answering them either as we go through the webinar or toward the end as our speakers have time. Next up is audio quality. If you're using a telephone, please click on the Use Telephone Audio mode. If you're listening through your computer, then please click on the Use Mic and Speakers option. Now I'd like to chat about some California CE requirements. You must be using a personal computer, no PDAs, and log in with your own information and unique URL. You must be logged into our online software for at least 50 consecutive minutes within the scheduled time frame of the webinar. You must actively respond to at least 75% of the polling questions. There will be 4, which means you'll need to answer 3, and you must complete the evaluation survey at the end of the webinar. Now a quick intro of our 3 presenters today. First up is Dean Quiyambo, partner with Armanino. He helps numerous technology, SaaS, semiconductor, and high-tech organizations address their audit, tax, and internal controls and outsourced accounting needs. Finance teams and audit committees have grasped his laser focus on bringing to life the audit items that matter most to their industry. Next, we have Ricardo Martinez, also a partner with Armanino in our audit department. He works with a variety of public and private technology companies. Prior to joining the firm, Ricardo worked with KPMG's audit group, where he had more than 12 years of experience conducting audit and advisory services. And finally, we have Ivan Makarov. Is that right, Ivan? Perfect. A controller with SmugMug. He's head of finance, accounting, and tax at the photo sharing and e-commerce platform. Prior to joining the company in 2012, he spent 5 years with the Big Four, helping technology companies integrate international tax planning into their overall business strategy. And now a quick glance through our learning objectives. Today we're going to identify the triggers to begin considering engaging an external auditor. We'll review the value of an audit for uncovering areas of risk, opportunities for improvement, and relevant financial metrics. We'll also recognize how partnering with an auditor who specializes in technology is beneficial. And with that, I will turn it over to Dean.
Thank you, Debbie. Really glad to be here. Thanks everybody for tuning in today. Like Debbie said, today if I could give you a little overview of our presentation, we want to talk about the state of tech, especially with regards to funding in its current environment, especially what we saw coming out of the stats out of Q1, both with regards to the current funding environment and the IPO market. We do want to talk about common audit triggers, and most importantly, we're going to put the most of our meat in the value of a first-time audit and some of the recommendations that you could see out of that. So with regards to the state of tech, and especially accessing capital today, really what it is maybe dollars are about the same, but it's definitely fewer deals, fewer bigger deals in the funding environment. I think what a lot of people are seeing is that, especially for the more later stage tech companies, the funding is definitely the funding pinch is real. They're saying that as much as a 30% decrease in that specific sector. So if you're a late stage company and you're trying to get funding right now, I think it's most important that you really have your ducks in a row and you're telling the right story for your organization. As we all know, the San Francisco Business Times is running their employment tracker, and they're tracking all the layoffs at some of the unicorns that we all know very well, and they're tracking that. So are people predicting doom and gloom, or what's really going on?
Yeah, I mean, I think, just to add to that too, Dean, some of the highlights that I've seen and just kind of monitoring just various articles, interestingly enough, the number of unicorn companies fell globally to 5 in Q1 of 16, and none of those were actually in the United States. And so again, as we talk about these unicorns, these are the companies, private companies valued at $1 billion or more. So the pullback kind of coupled with a lack of a viable kind of external market through the IPOs, as well as poor performance of the public markets in early 2016, is likely fueling the fire regarding concerns about another tech bubble. And certainly something that we're seeing on the audit side with respect to that in terms of the need and ability to access capital from companies. The good thing, though, for participants on this call, if you're in California, is that 60% of all the VC investments in Q1 of 16 were either made in California, New York, or Massachusetts. So we continue to see that as an area of focus for VC-backed companies here in the Valley and in Northern California, Southern California.
Just backing that up even more, I think the IPO market has been strong, but if you look at 2016, kind of looking at that low number, and so it does beg the question: is it the strong backlog that is just waiting for the market timing to kind of correct itself, and they just want to take advantage, or is it really a true a drying up? So that's out there as well, and just begs the question of why financials and data is very important.
Yeah, and I think just to add to that too, many of the recent IPOs have underperformed, which has added to the fears of investors, which is why we're kind of seeing a slowdown in terms of the actual IPO registrants or S1s that are being filed by companies. There were, I guess, one of the interesting facts that I found in kind of prepping for this was that there were no VC-backed IPOs on the NASDAQ or the New York Stock Exchange during the month of January, and that's the longest period without an IPO since September of 2011. And I guess in terms of the companies that are going IPO, healthcare is kind of the driving force for the IPOs in 2016. I think 58% of the VC-backed IPOs last year came from the healthcare sector, where traditionally we've seen it kind of driven more on the technology side. So that is something that we can kind of continue to monitor here in the Valley and in our technology areas.
So how do we get here to a timing of challenging funding? And I think it's a combination. What we're seeing is that overhiring, lack of some strong business processes, more market uncertainty, and just that stricter access to capital is kind of what we're seeing as the biggest drivers for kind of what's happening today.
And I think we're also seeing kind of the interrelations on a global scale in terms of the economies and the fears and concerns about the market, not only domestically, but then the interactions with China and the Asian markets as well, which is causing some concern from investors and from companies as well. And as a result of that, the funding from investors is now more focused on a company's plan to obtain profitability and how that path looks. So, whereas before that wasn't as much of a focus, now that is certainly a focus for investors.
So I guess the big picture, Ricardo, is that accurate financial statements, they matter right now, right?
Yeah, and I think it's important. I mean, one of the fundamental things that I like to bring to our clients is just the thought that accounting shouldn't drive business decisions, but it's really a byproduct of the business. And what we're trying to do with audits, just in general, is help companies make better financial decisions for their business, and of course, not driving them down a path based on accounting, but just letting them know the facts and circumstances around business decisions so that they can understand where the accounting falls and provide more accurate financial statements and be able to speak to those financial statements. I think one of the nice things is that when you have an accurate set of financial statements, you're actually comparable with other market participants, which is something that is very important these days.
Great. So I think that brings us to our first polling question, Debbie.
Yeah, first polling question of 4. And again, if you're here for CE, you'll need to answer 3 of the 4 polling questions. First up, is it true or false? The IPO market is the worst we've seen since 2009. A, true, B, false, C, not sure. And for those of you who'd like a copy of the slides that Dean, Ricardo, and Ivan are going through today, I'll be sending those out tomorrow after the webinar, so keep an eye out for those.
And then as we're going through and people are finishing up the polling questions, certainly as we have our discussions or engage in more details about our first-time audits, feel free to include any sort of questions. We can address those either or incorporate the responses as part of our discussion, or we can address those specifically at the end. But feel free to include any of those.
Perfect. And we'll wrap up this question in 3, 2, and 1. And it looks like a good chunk of folks got this wrong, actually.
Well, I guess I didn't explain it very well. But yes, I mean, the answer is actually A, true. And the reason for that is if we went back a couple slides, and we don't have to do that, but if we did, you'd see that the number of IPOs Q1 2016 is kind of grinded to a halt a little bit. And that's why we're wondering, is it a backlog of market timing, or is it really just that access to capital is drying up? So it's something that we'll definitely monitor going forward. All right. Well, now let's get to our case study with regards to SmugMug. You want to talk about your client, Ricardo?
Yeah. So we met SmugMug a couple of years ago, and I think it was primarily driven not out of necessity for an audit, but Vaughn will kind of talk about some of the reasons why he was looking to get an audit done. And it's a great case study because, traditionally people approach auditors in order or as a result of having some sort of clause in their financing agreements to have an audit done, whether it's through investors or whether it's through as part of a debt project. So this was actually a different case, though, which I'll kind of let Ivan talk a little bit about the company and the reasons behind his desire to get an audit.
Yeah, so we are one of the sort of older companies now in Silicon Valley that's still private. We were founded in 2002 during the time when funding was even way worse than it is now. When things were just impossible to fundraise. It was right at the end of the dot-com crash, and the company was founded by a dad and the son, and they founded it and quickly branched out into photo sharing. And at the time, photo sharing was very new. And because they couldn't fundraise, they quickly realized that they needed to start charging for subscription services that they were providing with photo sharing. And over the time, up until today, the company was bootstrapped and just existed on retained earnings. And when I came in and joined SmugMug almost 4 years ago, there was not sort of a CPA prepared financials, and so it took me some time to get to understand the layout of the land and to start putting policies in place and cleaning up financial statements. They were mostly internally prepared with the help of some outside advisors, but that's not an uncommon scenario. That often happens as company gets to a certain stage and they either got finance or they're starting to generate revenue and they want to get good financials. And so this was after doing this on my own a couple of years. I realized I needed some help, and I prefer to keep finance department lean. We're still growing. We are still trying to, when we have money to hire extra people, I prefer that we hire in the engineering department or design or anything that will help us grow the product and as a result help us grow the revenue, rather than hire for finance department where we're seen as an overhead to the business. And as I was thinking about how to do this, and one of the challenges we faced was how do we validate our financials, and how do we get some comfort level around what we're doing. And as I was doing this alone with the help of two other people in our finance department, I realized that the outside help would be great. And as I was looking at options, the options of an audit came about. I have a background working at a Big Four where while I was in tax, I still participated in audits, and I knew that especially being on the tax side of the audit, I knew that what we did a lot of the times was actually added value to the work that the tax department was doing, and I thought it's just probably the same thing in finance overall. And so we wanted to get a validation on our work and also to put extra policies in place. And the other thing that we wanted to do is come up with the set of financials that a non-finance person could just pick up and use and read, whether it's somebody from the banking side or one of the owners of the business or one of the key managers, key executives in the business, and could use. And so one of the easier ways to do this was to actually get them ready for the audit and to come up, for example, with a set of footnotes that will explain a lot of the meaning around the numbers and some of the accounts that we have and policies in place and so forth. And so that was the whole reason, as I realized it'll just help us all if we did get an audit. And I started looking at various audit firms and started reaching out to my connections, and we came along in a competitive situation with Armanino and picked them to help us to go through this process. So that's sort of around the background where we're at.
Yeah. So Ivan, I think I wanted to touch on something that you said, is that you said, it would help people understand the financial statements, the footnotes, and kind of all of that. Did you think that was important? I imagine that, when we talk to a lot of tech companies, it's the CFO or the VP of finance is kind of the Lone Ranger, right? You're out there and you're saying, no, this is the right thing to do, and everybody else says, no, I think we should do it this way. And bridging that gap, did you find that to be helpful?
Definitely. It definitely helped me, and then it helped a lot of other people that they're not using the audit report, and internally as well as externally. There's been a lot of value added that I think we'll talk about here in a second, but definitely I think it improved a lot and then one of the things that audit report and the way financials are presented for GAAP purposes in the audit report are a lot more high level. Mm-hmm. and a lot more helpful to the people who don't like to look through 200 accounts. Mm-hmm. And when we summarize things, we put them in right categories and keep it simple as they are in the audit report. It helps everybody to understand and have a better picture of what's going on if compared to what it was in the past when we just had the regular income statement broken up by accounts and so forth.
Good.
And I think, a couple other things to add. The challenges that Ivan has highlighted are really no different for most of the first-year audit clients that we work with. Certainly we always see that there is, as Ivan mentioned, there is a focus on growing the business, particularly when the finance department is lean. And we do see a lot of that just in general where it is one or two persons typically handling the finance accounting function. We also see it that, there is an emphasis on growing the top line, which is usually how a lot of companies are typically graded in this market, is how quickly can you grow the revenues. And I think the nice part about an audit is that it lends credibility to those numbers. And more often than not, and in all honesty, we never give you revenue as auditors. Unfortunately, we only take it away. So one of the things that we typically do as part of that first year audit is really focus on the revenue recognition and the circumstances around that to make sure that you're compliant from a GAAP perspective. And what we typically find, again, this is not unusual for the marketplace, and I'm not saying anything that people don't already know, but the focus is on growing the revenue. So if anything, you're going to accelerate the revenue recognition. When you actually get an audit, we put you in compliance with GAAP, which is actually pretty complicated from the revenue recognition side, and it's convoluted and it's confusing sometimes. But when we do that, we put you and we align you with where the market is accounting for revenue. So it is important. A couple of other things, just as we focus kind of on SmugMug's side, and just in general, most of our first year companies, what I typically find is that most of them are kind of this modified GAAP basis, for their financial statements, or some of them are even on the income tax basis of accounting, where you're really just focusing on cash. And to Ivan's point, you are at a very granular level when you're actually analyzing and providing financial statements up to management or to other individuals, the key decision makers in the firm. An audit can provide a more summarized approach to that, giving you a set of GAAP financial statements and footnotes that are comparable and that are consistent year over year, that you can provide to not only management but to any other third party that you think is relevant.
Thanks, Ricardo. So now we're at our second polling question. Again, you'll need to answer 3 of the 4. So if you missed one, please answer the remaining. Question is, which of the following were challenges for SmugMug? We just went through. Was it A, process validation, B, they wanted more value add, or C, they struggled, they wanted to go beyond their sort of immature accounting function, probably a bad word, but wanted to sort of get the accounting function up to speed with the rest of the business, and then, or D, all of the above?
And so as you guys are answering those questions, a couple of other things come to mind as we talk about just first year audits in general and what we experience working with Ivan, and then also just in general with some of our other companies. Typically, areas of focus during that first year audit and then even going forward for most of our tech companies relate to revenue recognition. Again, I kind of mentioned that, where most of the companies we see accelerate the revenue recognition component as opposed to analyzing it in relation to what's called multiple element arrangement accounting, or even software revenue recognition. Capitalized software development costs is another area that is typically focused on during the first year audit. Goodwill and intangibles is another one. Debt equity, one of the bigger ones that we typically see, which is not accounted for in accordance with GAAP, and oftentimes it's because it is confusing. There's a lot of stuff that isn't intuitive. Stock-based comp, for example, accounting for debt issued with warrants. Derivatives, oftentimes we'll find that debt equity instruments contain some sort of embedded derivative with puts and calls that are often overlooked. Again, a lot of this stuff is on the debt equity side is non-cash, but it is something that we typically focus on, again, to make sure that you're comparable year over year, and then also comparable with your with the marketplace. And then taxes, of course. Taxes is a big one, both domestic and foreign, as well as sales tax, which is a growing area of focus for a lot of technology companies as well.
Awesome. So let's wrap up this polling question pretty quickly. Submit your answers, and it looks like about 89% said all of the above.
And that's definitely correct. Those were the challenges for SmugMug. I definitely wouldn't call Ivan immature. Not the best word, but I do feel like people will understand and appreciate that. It's almost like the cobbler whose children have no shoes, right? It's like the cobbler is so busy doing so many things for everyone else that they can't invest back in their own finance function. And really, we're happy to say that Ivan has done that. And one of the ways that he did that is through getting his first time financial audit. And so we'll walk through now the values that you can get from having a first time audit, especially in the current environment where financing can be at a premium.
Yeah, I think as I thought about which areas have we improved our reporting, and I identified a few of them. Number one, Ricardo mentioned revenue recognition is definitely a big focus during our first year audit, where we spend a lot of time in the beginning and then towards the end as we were wrapping up. It's not that our revenue recognition was not was wrong. It's just that we had to get more accurate and more timely about our revenue recognition. And so something that happened was that because we did spend a lot of time, and I had to use an engineering help to help us get the right reports, it was much easier for me to sell to our CEO that this is a project that we should take on from engineering perspective and get ready for the next year's audit. And so Whereas going into the first year audit, a revenue recognition was mostly a manual process where I had to go and make journal entries by hand and then make adjusting entries by hand every month. We automated the process. And so I was able to get an engineering resource on my side. And it was much easier to sell to just say, well, this was the auditor's recommendation rather than it's something I think that's necessary. And this is something that I think a lot of the CFOs, a lot of the challenges they face when they try to sell their project, something that they want to improve is explaining to somebody that they need an engineering resource to reorder the systems. And that engineering is not going to work on the product, but it's going to work on the accounting side. But it was much easier to sell, and we're able to be went into the second year audit in a much better shape. And the second year, we spend considerably less time on the revenue recognition. The other thing that Ricardo mentioned was stock compensation. As a private company, that's something we've never done. And something we got ready for the first year audit, and then as a result, we got way better at it for our second year audit to the point where we're comfortable about it, and we have stock compensation expense and schedules that are compliant with all of that. So that was great. The other thing that we learned quickly was close process. We went from closing our books almost literally for 6 months. As a private company, we were in no rush, and we didn't really do a very thorough close until we had to prepare a tax return. But this way, we were able to close our books within 2 weeks of the year end and get everything ready for the audit. And so it not only really helps us with the audit and financial reporting, it also helps us with the tax return, because when the tax return and extensions come along, we already have a good set of financials, and the tax return prep is way easier now and takes way less time down the road than it used to be, because we don't have to close the books and things are in good shape. And also the tax return firm that we used also helped us to prepare the tax provision. So they were already familiar with everything that happened to the business in the last year, and so tax return prep got way easier for us. So these are some of the benefits that came from the audit. The other thing that happened was that we still have to, while we don't have a lot of the external reporting, like outside investors that we have to report to, we still deal with banks. We deal with merchant services. We are B2C, and so we have to submit financials for review to make sure that we get competitive rates from them. And just in general, they're ready to work with us. And so really helped us right away, made process much easier. For example, American Express just almost overnight doubled our credit line. And because we have a 2% cash back, that right there just almost paid for the audit to have that benefit.
Can you say that? I'm just kidding.
Yeah, but it's true. It was a really good benefit. The other thing that happened, likewise with our merchant services, we use Vantif and American Express. Much easier process of review with them on an annual basis. I just send them a set of financials and we're done. In the past, they sometimes even required the owners of the business to prepare their own financial statements to make sure they're guaranteed. But once we have an audit report in place and audit firm that represents us, it really helps make all of that process easier. So we saved a lot of time. Whatever extra time I spend now on the audit every year, is a really good return on investment in the future year when I have to go through these reviews.
And Ivan, in your relationship with these individuals, whether it was the bank or the merchant services, did they ever allude to you, well, geez, Ivan, if you got an audit, it would really help, or did you kind of was proactive about it?
Yeah, they haven't really mentioned it. Okay. I think when they would ask for CPA prepared financials, I'm a CPA myself, so I was able to to say that, but once it's audited financials, it's much easier.
Great.
And because what would happen in the past, while I would give them my financials, I don't get any questions once I send them the report, because report contains everything in there, and it's prepared by third party.
Great.
They have much more confidence in them than it's something that was prepared internally.
Yeah. So in this market right now, Ricardo, where financing is tough. Mm-hmm. That could be very helpful. What do you think?
Oh yeah, absolutely. I mean, I think it again, the whole process is I won't lie to you, it's tough. It's rigorous, and we Yvonne and I certainly had our challenges going through the first year, just on both sides. I think it's not uncommon. People try to avoid an audit as much as possible, but I think, as you can see here, Yvonne has highlighted some of the value that's brought about after that audit is completed. And then, certainly one of the things, or I guess a couple of things that I would highlight as part of this, is that with the audit being so difficult that first year, the ability to have somebody outside of the organization and bounce ideas off of is huge. So now, once you engage an auditor, you're so focused on the numbers, being kind of the head of the finance accounting organization, that sometimes it's nice to have somebody outside with the relevant accounting experience to bounce an idea off of. And I think one of the things that Yvonne and I have done well is developed a relationship together very quickly, such that I'm reaching out to him, he's reaching out to me whenever there's questions. And I think we've done our job. I think we're a good example of doing our jobs right on both sides, where each of us is able to reach out to the other regularly throughout the year. We're all doing our jobs right. We've actually vetted out a lot of the significant unusual transactions during the year, so that when you get to year end, you're just kind of focused on a lot of the lower level stuff. And I think Yvonne kind of highlighted one of them previously, which was the revenue recognition, where we gave him a recommendation. They went back and kind of redesigned the system, and then we were able to look at it even before we got to the year end, the second year end audit. So it helped both parties speed up that second year audit. So I think if you're doing the job right, you're working well with your auditor and your partner and your manager and the team, I think it can help the organization extremely well. So certainly something to encourage you to do if you do decide to get an audit, is make sure you're developing that relationship with your audit partner and your manager and the senior as well, so that you have a team now that you can bounce ideas off of. Some of the other benefits that we've highlighted here are certainly, again, providing the results of your operations that are comparable, and providing timely information to third parties or to management in order to make the relevant business decisions, putting you in compliance with the accounting standards. Again, revenue recognition being a big one that we focus on, cost capitalization, taxes is probably the other one. When we focus on audits, these are the areas that are most often scrutinized by third parties, whether it's later on down the road as part of an M&A, as part of an IPO. Banks typically look at this just to make sure that you're providing accurate numbers that have been vetted by a third party. The other piece that we focus on is the internal control environment. So while in the case of SmugMug, we didn't actually test too many controls, we still looked at the internal control environment to make sure that we were providing recommendations to Yvonne and his team and the rest of the company to kind of put them in line with what our other similarly staged companies are doing. And I think that was something that we did pretty well. So, certainly one of the things he and I talked about at the end of the first year audit was just kind of the list of recommendations that we had, and we tried to make it commensurate with the stage of development that the company is in. So we didn't try to make recommendations that we would do for a $200-300 million company, but certainly something that was more along the lines of being relevant for him and SmugMug.
This is actually very useful for us because there were many times during the audit in the first and second year where I come from a background of working in a large accounting firm, and so all of my clients were large companies that were public. Mm-hmm. And so going through the audit, I would often ask Ricardo and his team, okay, what are the companies of our size are doing in this area? What are they using for their bank? And so forth. We've had a lot of these questions where I was able to reach out into internal network or to the network of Armanino and get a lot of these questions answers that I wouldn't get answered otherwise. So it was a really nice added benefit to the audit.
What about talk to us and to the people listening? Obviously, SmugMug's private, family owned. Let's talk about the owner perspective. right? I believe two brothers.
Son and a dad. Yeah.
Father, son.
Mm-hmm.
Let's talk about number one, what did they want an audit? Was there apprehension there? And then two, what did they feel after the process?
Yeah, they were actually quite skeptical because they knew that I had limited resources, and they knew that it will take away a lot of my time during the year, especially during the year end. It will make things more complicated. And so I had to really sell it hard to them. And so when I was interviewing audit firms, I actually told them that I said, you guys need to really convince them that this is an add-on, this is a value in it rather than an evil or an expenditure. And so they were quite skeptical, but because I also had a selfish desire to do the audit, I wanted to make sure that what I'm doing is get validated by someone else other than myself.
Absolutely.
That someone else comes in and tells my CEO that, the financials are in good shape, or this is the area that you should improve. And so that way, I had to sell that to them. But while they were skeptical, they took me at my word, and also the word of the auditors. And great. I've already explained the benefits, both from the accuracy standpoint and financial benefits of getting the audit done, and how it actually freed up a lot of our time. During the year, and made our jobs less stressful. But they saw it the same way as well, definitely not a question that was the right decision in our mind.
And let's talk about internal controls, because we know, majority of finance teams out there, especially for organizations like yours, are very lean.
Mm-hmm.
And so, we always say that trust should not, or really should not be an internal control. But, in a very small organization, sometimes that is a control. What was their attitude toward that validation with regards to your processes, your people? Shed some light on that.
Yeah, I think it's still hard for us sometimes to implement some of the internal controls because things like segregation of duties, we can't segregate a whole lot when we have a team of 3 people. And so we do take these recommendations and just sometimes just have to say, well, there's nothing we can do about this. But there's a lot of other areas too where, for example, we talked about revenue, where we wanted to automate the process. Not so much that we felt that there's a potential for fraud, but there's potential for errors. When you do things by hand and deferred revenue schedules and so forth, we wanted to automate it, and so we automated it. So it became also validation of not only of our revenue process, but also a cash process, because on the cash side, that revenue becomes validated once it's automated, and so there were a lot of these things that were put in place. A lot of, for example, processes around payroll. Were recommendations given where we put in place that are sometimes really hard to do in a small company when, especially when people have been doing things the same way for many years, and keeping them simple, we're able to just put very simple controls in place that are now safeguarding the process and the assets around payroll.
And I think that's the important part too, is as we go through and I think about, our recommendations that we provided to Ivan. A lot of the stuff, again, we understand, we try to look at the control environment, understand the finance accounting group, in this case with Ivan kind of being a lot of times basically the one and only person doing a lot of this stuff. And we try to be practical about it. So I think as we're making recommendations, again, it's something that we understand, Ivan can address either currently, or it's something that he can address maybe sometime down the road in the short term, maybe a year or 2 down the road, or as he picks up additional personnel on his team. But again, it's something that we try to do, and just being practical about what we're recommending. We're not going to recommend something that we know the company can't implement, and we know that doesn't add value to the entire process. But the payroll example is a great one, where it's a simple kind of review control just to make sure that there isn't any sort of potential for error and stuff like that.
Great. And always the last benefit is you never know, right? You just never know when that potential M&A event happens, and I believe that business owners and the finance team really like to know that when that offer comes, that their financials would stand up through that purchase price due diligence.
Yeah, and I think on the M&A side, I mean, certainly as we talk about valuations, where we've seen an acquirer focus on through the due diligence process, again, I'm just give you a little tidbits here, tip of my hat, is revenue recognition and deferred revenue, taxes, and including any sort of deferreds, net operating losses, and any sort of limitations on net operating losses. Sales taxes is another one where companies typically get dinged. Debt equity issues and not accounting for those. Again, even though they're non-cash, a lot of companies just want to see kind of a completeness in the understanding of the debt equity accounting. And then capitalized software, whether or not the company capitalizes software development costs and why or why not. So what I've found is in hearing just from people who haven't gone or received an audit, then gone through an M&A, is these have been kind of areas of focus, challenges that challenges that those companies have had in explaining those, because another benefit of having an audit prior to an M&A transaction is we as auditors change roles. In fact, from being your auditor, it's almost being your advocate during the M&A process, discussing and validating the accounting for complex areas, and then certainly assisting in the due diligence with other auditors, because oftentimes, let's face it, if you're not in the finance accounting function, people have a hard time understanding our talk. And to have somebody else aside from the finance accounting organization actively or proactively assisting you through a due diligence in speaking with the other firms or the other companies' auditors really helps in terms of validating numbers or explaining numbers or explaining the rationale behind some accounting transactions.
Great. Okay, that brings us to our third polling question, Debbie.
Thanks, Dean. So last question. Well, actually, I'm sorry. Third question. There's one more upcoming. True or false? SmugMug's audit helped them increase access to capital. You might remember Ivan speaking to that a little while ago. Is it A, true, B, false, or C, not sure? And again, for those of you asking, we'll be sending out a copy of the presentation slides as well as a recording of the webinar. So in case you want to go back and listen to all the good insight we're getting this afternoon, you'll be able to. And let's close this poll in 3, 2, and 1. And it looks like we've got 100% correct.
Outstanding.
This is great. Everybody was listening. That's good. Apparently, Ivan's explaining it better than we are.
Yeah, that's good. He's actually in the line of fire. So that's great. All right. Well, so some recommendations. If you are going to consider leveraging an audit and getting some ROI out of it, maybe for funding, for validation, for numerous reasons, we definitely think that there's a couple things that you need to take into consideration. Ricardo and I, you can tell just based on the relationship that Ricardo has built with Ivan here, that he cares. I mean, he's a partner that wants to be there, that wants to be your advocate, that wants to work with you and help you through whatever strategy your company is facing. I think also, you want to work with someone who's an industry specialist. Don't say, okay, yeah, we want to go and get an audit, and the person who does the tax return of my company's business owner, I really think that would be the right person to do the financial statement audit, because if maybe they specialize in something that doesn't really correlate. So having that industry specialist really goes a long way.
And just on that point too, I think that's one of the more important points on here is because, let's face it, in the technology industry, we're I guess most of the companies in the industry is so groundbreaking and actually has created or driven the FASB to create a lot of the accounting around multiple element arrangements, software revenue recognition, capitalized software development costs. A lot of that stuff comes from technology companies because they are, let's face it, some of the most creative people in the industry, and so you need to find somebody who is that industry specialist who truly understands the industry, because there are a lot of complexities within the industry and the accounting for the rev rec and the debt equity. And I know I'm kind of beating the dead horse on those two, but certainly some of the more difficult items.
Yeah, we've had some of these questions, for example, around the funding of the business. When the business was founded by the family, it seemed simple, but once you start reading through the agreements and going all the way back to the founding of the company, that's not something we've given much thought about, how to account for some of these equity items. But looking back, that was great that we're able to visit those. Likewise, some of the investments these days that people do, we had some questions around that we're able to solve, that we were not originally giving very much thought to, but definitely very great technical areas where it was great to get an input from specialists in that area.
Yeah, and just the last two items here on this slide is just, when you're working with a specialist, you also want to make sure, it's great that they know what they're doing, but you want to make sure that they're going to call you back. Because I think there's a lot of specialists out there that they really know what they're doing, but they're just so busy that they don't have time to invest back into their clients. Here at Armanino, that is our specialty, is the fact that we are very high touch, and you can count on your partner, calling you back, emailing you back for your questions all throughout the year, not just, compliance time for the auditor tax.
And so I think overall what we're trying to highlight here is just, as if you embark on that process of seeking an audit, what we've tried to highlight on this slide is the qualitative factors to look for as well, because certainly you're going to look at the quantitative, and it's not cheap, to be honest with you, to get an audit done. There are firms that are on the lower end, firms that are on the higher end, but I think what we would encourage you all to do if you do decide to look for an audit is really look at the intangibles, look at the qualitative factors, because that's really what's going to try to separate a true service provider and a partner with you going forward.
Great. Okay. I think that brings us to polling question number 4, Debbie.
You're right, and this actually is our last polling question for the webinar. So if you've missed one, please do make sure you answer this one for CE. Just a quick question. Are you currently working with an auditor specializing in the tech industry? Most of the folks who registered for the webinar are in that space. And so we just want to know, are you A, yes, B, no, or C, not sure, haven't asked, but it's probably a good idea too.
Well, I mean, to be honest, not sure. I think the thing there is that's already a no.
Yeah, exactly.
All right, let's close this poll. We'll give you 3, 2, and 1. And it looks like we're pretty split.
Yeah, no, that's good to hear. For everybody who is out there working with an industry specialist, you're doing the right thing. For everyone else, we might be taking you out to lunch pretty soon. So with that said, during this webinar, we've covered triggers to consider, engaging an external auditor, how to get value out of an audit, and how partnering with an auditor who specializes in technology is very beneficial for all the startups out there. Do we have any questions?
Yeah, if you've got any questions as we've gone through today, please do submit them now. We've got a few minutes here. I actually do have one that came in. People are wondering, is there a particular revenue range or a threshold that we'd recommend that tech companies should start, looking for an auditor, thinking about engaging a partner, asking the right questions?
There really isn't. I mean, there's not a bright line in terms of how much revenue you need to have. It's really at the point that you're either driven to get one or you have a desire to get one because your revenues have reached your own kind of internal marker that you think you need one. But really no revenue threshold to look at per se.
Yeah, Ricardo, just to elaborate on that a little bit more. If there's no bright line revenue threshold, then what would you think would be some of the items that people could say, okay, well, if it's not a dollar amount, then what kind of factors should they be considering? Maybe if there is access to capital is getting tight or things like that.
Yeah, if you're looking to try to embark on some sort of debt equity transaction, if you're looking to try to get access to more capital, those could be kind of qualitative triggers to potentially get an audit. Sometimes we hear of people who might have M&A events that are maybe 1 to 2 years down the road. There's more and more suitors that are coming up asking for kind of audited set of financial statements. I've actually had a couple where the need for an audit is being driven by actually state or government funding as well in some cases. So there's a myriad of factors that could contribute to that.
Good.
Sounds good. Any last words for the folks listening as we kind of wrap up, gentlemen? Ivan, any words of wisdom for their CFOs?
No, I think I kind of wish we would have done this a year or two earlier because we would have been in better shape now. But it's definitely worked great for us.
Yeah, I mean, I think, and to the extent you have any sort of technical questions too, I know a lot of those sometimes pop up after the webinar. Feel free to shoot those over as well. Just again, you have another person to bounce an idea or bounce a question off of.
Yeah, and my last point would be this. Hey, we understand, nobody wants people in their underwear drawer, right? Nobody really wants an audit. But if you're going to get one, make sure that you're going to get the ROI out of it. Make sure that it's going to value you, your team, your business, and that it really becomes an asset to you, not just a stack of paper that you file away in your desk.
I like it. And for those of you who have any questions, as Ricardo said, I've got Dean and Ricardo's information up there, and I'm sure, if needed, if you have any questions for him, we can probably direct those his way. So again, thank you for joining us for today's webinar. For CE, you'll receive a certificate from us in the next 3 business days, and the slides and the recording as well. Thank you again, and we'll see you soon.